LG Electronics India, a subsidiary of the global LG brand, is launching an initial public offering exclusively through an offer for sale. This means existing shareholders, primarily the promoter group, plan to sell a portion of their equity to the public, and the company itself will not receive fresh capital from this offering. The IPO aims to provide liquidity to promoters and establish a public market for the shares. IPO key details. Issue period. The IPO opens on 7th October 2025 and closes on 9th October 2025. Price band. The share price is fixed between 1080 and 1140 for retail investors. Employees have a discounted price range from 972 to 1032. Lot says investors must apply for a minimum of 13 shares, equating to a minimum investment of around 14,040. Issue says approximately 15% of the post-issue equity will be offered through the OFS, amounting to roughly 101.8 million shares. Objective. The primary objective is promoter stake monetization. Funds raised will be received by the selling shareholders, with no fresh funds raised for company growth. Business overview. LG Electronics India operates in both the consumer electronics and home appliance segments. Its product portfolio includes refrigerators, washing machines, televisions, air conditioners, and microwaves. Established in 1997, the company has evolved into a market leader in these categories, with a presence strongly felt across the Indian retail market, especially offline channels. The company has two key manufacturing facilities in Noida and Pune, leveraging advanced automation and manufacturing technology. LG also maintains an extensive distribution and after-sales network, including over 36,000 retail outlets and 949 service centers nationwide. SWOT analysis. Strengths. Market leadership. LG India has consistently maintained the number one position in multiple product categories for over a decade. Strong brand and parent support. Backing of global LG Electronics provides technological and financial strength. Robust manufacturing and supply chain. Local manufacturing and supply chain efficiencies contribute to cost competitiveness. Extensive distribution network. Well-established retail and service network enhances customer reach and satisfaction. Weaknesses. No fresh capital raised. Since the IPO proceeds go to existing shareholders, LG India will not receive funds for expansion or debt reduction. Raw material dependence. Significant reliance on imported components creates exposure to commodity price fluctuations and supply chain risks. Geographical concentration. Manufacturing is tied to two locations, which increases vulnerability to regional disruptions. Legal contingencies. Existing legal claims and contingent liabilities may impact future financials. Opportunities. Growing Indian consumer market, increasing incomes and urbanization drive demand for premium and smart appliances. Product and technological innovations. Investment in smart, AI-driven appliances aligns with evolving consumer preferences. Expansion potential. Opportunities exist to deepen penetration in existing categories and explore new products. Threats. Intense competition. Competitors like Samsung, Voltas, Whirlpool, and Havells challenge market share. Supply chain volatility. Fluctuating raw material costs and logistics delays pose risks. Seasonality, demand fluctuations linked to festive seasons and weather impact quarterly performance. Financial overview and growth. LG Electronics India exhibits steady financial growth. Revenues increased from approximately 16,834 crore in FY 2020 to 21,352 crore in FY 2024. Profit after tax grew from 1,174 crore in FY 2022 to 1,511 crore in FY 2024. The company maintains sound EBITDA margins of over 10%. Return on capital employed is notably high at around 45%, highlighting operational efficiency. Peer comparison. Compared to its peers, Havells, Voltas, Whirlpool, and Blue Star, LG Electronics India demonstrates superior revenue scale, broader product coverage, and higher profitability, making it a dominant player in its market segments. Investment recommendation. For long-term investors, LG Electronics India represents a quality opportunity given its leadership position, consistent financial performance, and strong brand equity. However, since the IPO is an OFS, short-term listing gains may be modest. Investors are advised to consider valuation carefully and view this as a long-term investment. Cautious traders may prefer to wait for market stabilization post-listing before buying. Disclaimer. This presentation is for educational and informational purposes only and does not constitute financial or investment advice. Potential investors should rely on their financial advisors and thoroughly examine the official red herring prospectus before making any decisions.